This is Horizons Middle East and Africa. Our top stories this morning. Markets remain in wait-and-see mode as central bankers gather in Jackson Hole, with investors awaiting remarks from Fed Chair Jerome Powell. Fed Governor Lisa Cook says she won't be bullied into stepping down as President Trump demands her resignation over allegations of mortgage fraud. And Israel is doubling its army reservists in the war against Hamas in Gaza, a sign that preparations are underway for a stepped-up offensive despite ongoing talks about a ceasefire. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and investors clearly waiting what will come out of Jackson Hole. Of course, on Friday, we are awaiting a speech from Fed Chair Jerome Powell. But as our guest coming up in just a few minutes says, markets are quite noisy right now, and there is a lot in focus. If we take a look at U.S. equity futures, though, rebounding ever so slightly, NASDAQ 100 futures largely flat, but that comes after another down day for the tech-heavy index. We actually heard from Oaktree Capital Management co-founder Howard Marks, who's cautioning right now potentially U.S. stocks are in the early days of a bubble. Some interesting points there coming from Howard Marks, especially as we continue to see tech really dragging down a number of indices. The Bloomberg Dollar Index also in focus as we await those comments coming out of Jackson Hole. And as we continue to see a sell-off in stocks, we did see the price action on Wednesday for the greenback dominated by the pressure campaign that we did see from President Trump. But we saw the dollar paring back some of the losses after we did get those Fed minutes on Wednesday. Brent crude trading in the green right now, up just over 0.3% there, holding on to gains, and that coming after a report that we got on Wednesday, which actually did show a decline in U.S. inventories in crude right now, Brent crude right now at about $67.10 a barrel. And gold right now trading down about 0.2% there. But as our MLive team notes, stuck in a relatively narrow trading range, a touch weaker today, as we were mentioning. But still, we've seen the metal rally by more than a quarter this year. We're seeing a few different storylines focused in on gold. It is partially subdued because of some optimism that we are getting over a potential ceasefire between Russia and Ukraine. But then also, what does this mean going forward for the Fed? And also, what is the commentary that we're going to get out of Jackson Hole? But gold right now at $3,340 an ounce there. And let's just bring you our terminal chart, taking a look at the expectations of a cut in September when the Fed meets again, and especially as we await those comments from Jerome Powell right now. Interest rate swaps pricing in now about an 80% chance of a cut, but strategists are still warning that the decision may, of course, be determined on upcoming releases of economic data, because the prior data that we've gotten is a bit dated, as some people have noted. Let's, though, check in on how markets in Asia are faring. Min Lo, of course, is standing by in our Hong Kong studio with a closer look. Min, what are you watching this morning?
Hey, Jen, as you can see, investors are a little bit on edge today as we await Jackson Hole. And interesting, right, as we see that rotation out of tech stocks in the U.S. over concerns about valuations and the pared back sort of expectations when it comes to rate cuts. But here in Asia, we are starting to see dip buying when it comes to the Asia tech stocks, the likes of Samsung, Advantest rising today. The TAIEX really being lifted by TSMC, gaining about 1% today as well after the biggest single day loss yesterday in about 4 months. Nikkei is down today. We are, of course, looking ahead to the CPI data tomorrow, also looking towards Jackson Hole and any comments out of Ueda that could possibly provide guidance on the rate hike expectation in Japan. But flip the board, take a look at what's happening in China. It's a big earnings season, and here we can see the momentum continue to gain ground onshore. The CSI 300 up 0.7%. That's after it took out the highest level since about 2022 yesterday. But the Hang Seng is down. The Hang Seng Tech off by about 0.5%. It's really dragged down by the earnings that we got so far from Baidu, seeing the biggest decline in its revenue in about 3 years. Investors really punishing the stock right now. Baidu is among the cheapest Chinese internet stocks in Hong Kong right now. But here we have a pretty mixed picture onshore and offshore. Jen.
Fascinating. Thanks so much, Min Min Lo in Hong Kong. We'll check back in with you in just a bit. Let's turn back to our top story, though. Minutes from last month's meeting show that most Fed officials highlighted inflation risks outweighing concerns about the labor market. This comes as tariffs fuel a growing divide within the central bank's rate-setting committee. Let's bring in Bloomberg's Asia economy reporter, Katya Dimitrieva. So, Katya, dig into more of the details that we did get from the minutes on Wednesday.
Yeah, well, more than half, or about half of policy-setting members said that the risks to inflation were outweighing the risks to the labor market, and in other terms, quite hawkish when it comes to inflation. Now, this is before we got that July labor market print, the employment numbers that were very weak, plus the revisions to prior months. And so there is some question about whether that is sort of in the back mirror now, that we're looking forward to an economy that's actually a lot weaker than anticipated, especially when you look at the jobs numbers and how that will potentially be messaged by Powell this week at Jackson Hole.
And that is really the marquee event for markets this week, Katya. Can you just give us any insight into what we're expecting? As one of our guests noted yesterday, Powell's in a very difficult position right now.
Yeah, absolutely. Especially when, we were just talking about the labor market report and how that picture has changed quite dramatically just in the past month alone. And right now, after that labor market report, markets had priced in a cut in September. That's almost 100% guaranteed, plus another one potentially by the end of the year. And so the question is basically, will Powell change his tone? Because the context going into this is that the Fed policymakers, as well as Powell in particular, have been quite hawkish in the past month in public comments and in statements, and as the minutes clearly show. And so the question is, given the labor market data that we've seen, given that the jobs market, which, by the way, is the theme for Jackson Hole this week, which is the labor market and changes to the outlook, it'll be interesting to see whether we see a bit of a different tone from Powell and potentially how that could reprice things for the market.
Thanks so much. Our Asia economy reporter, Katya Dimitrieva, on the latest from the Fed. Let's continue the conversation, though, and bring in Deepak Mehra, chief economist at Commercial Bank of Dubai. Deepak, thanks so much for joining us. So Katya was just walking us through some of the details that we got from the minutes. As we go into Jackson Hole, you don't believe that it has as much relevance as the markets are making it out to be. Can you just explain your assertion there?
Yes, Jennifer, thank you. I think look at the position of Chair Jerome Powell. His successors, or his successor, is already being interviewed. A couple of his own FOMC members have dissented against him. Few of them are actually vying for his job. So, in a sense, he is a lame duck Fed chair right now. And if I were in his position, I would stay away from commenting about interest rates at all and stick to the agenda of the address, which is policy framework. His address is going to focus on Fed's policy framework going forward and a bit of economic outlook. And I think he should just stick to that rather than getting into something which possibly the market would not give too much of credence to, given his position, and given that he may, a shadow Fed chair may be appointed very soon.
Well, he is a lame duck, as you do mention, Deepak, but still markets are waiting to hear some commentary, especially if we look at a lot of the data that we've been getting and that we will get. What then do you expect?
I think exactly what you just said, and the market should focus rather on the August data, which is going to come out in the next couple of weeks before the FOMC, the CPI and the non-farm payroll in particular. And I think those are more important things to the market. And I'm surprised that the market is on a standstill because of Jackson Hole. Jackson Hole is not the main event. The main event would be what happens to the non-farm payroll when we see the August numbers. We've seen huge markdowns for May and June. July was also very tepid. So do we see a revision of July upwards? Do we see it also revised down? What happens in the August payroll growth? I think those are more important because that will have a clear impact on what the FOMC members decide when they meet in September. Right. Remember, labor market is the bigger concern. Inflation, it is already being discussed even in the FOMC minutes, may not be a persistent issue. Tariffs may lead to one-time price increase, and that may not lead to persistent pricing pressures.
Deepak, as you mentioned, we are seeing a bit of a standstill, at least for the markets right now, just leading into Jackson Hole. Howard Marks saying potentially U.S. stocks are approaching a bit of a bubble, I think is the term specifically that he used. What is the next catalyst then? Is it Jackson Hole? Is it some of the data points that you were just mentioning there?
I think one of the biggest catalysts, which is coming in the next couple of days, is NVIDIA earnings. So NVIDIA hasn't announced its earnings yet. It is one of the last companies, but it is the godfather of AI, as is often referred to. So when this comes out with its earnings, we will have a better idea of what's really happening in the AI space. With all the CapEx happening, it all shows up in NVIDIA earnings. And what is the outlook for that CapEx? And I think that, for me, is the biggest catalyst. And if you see what's happening in the market, the tech is getting sold off. The tech is getting sold off because there is a concern that AI may not have a payback. And I think NVIDIA earnings become very important. We'll, of course, have PCE end of this month, but then other data as well.
Do you see then any sort of correction coming in the near term, though, for some of these valuations that we're seeing, especially in the U.S.?
I think a lot will depend upon what NVIDIA tells us and what sort of outlook NVIDIA gives for the rest of the year. That may, if that outlook is strong, which we expect, because having seen the numbers from hyperscalers and how they are going to keep spending money, NVIDIA gives a solid outlook, the market is likely to stabilize at these levels. However, if that is not something that the market was expecting, comes below expectations, then this sell-off can very quickly lead to a correction. I have no doubt about it.
Well, we'll see how Jackson Hole goes and subsequently then how NVIDIA earnings go. Deepak Mehra, thanks so much for your insights. Chief Economist at the Commercial Bank of Dubai, joining us there. Now, coming up, we turn to the Middle East. Israel's military is calling up about 60,000 more reserve soldiers to join the war against Hamas in Gaza. The latest live from Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israel's military is calling up about 60,000 more reserve soldiers to join the war against Hamas in Gaza, in a sign that preparations are underway for a stepped-up offensive, despite ongoing talks about a ceasefire. Prime Minister Benjamin Netanyahu has previously approved a plan to extend the military's ground campaign to Gaza City, which could further displace 1 million Palestinians. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams, who's joining us. Dan, does this mean the operation to take over Gaza City is now imminent? How are you reading into this?
It's certainly closer to implementation. 60,000 is a significant call-up of men and women. It corresponds to what we've been told, that Israel would require an additional 5 army divisions to carry out this promise, this threatened advance on Gaza City. With that said, the Israelis are capable of mobilizing reinforcements often overnight. They have the legal arrangements for that. They have the logistics for it. And these 60,000, we've been told, will be expected for mobilization around September 2nd. That's almost 2 weeks away, which suggests, again, that this is part of what has been a staggered call-up, a staggered preparation for an advance that the Israelis may not be relishing themselves. They may see the very publicity around this plan as a means of pressing Hamas into a ceasefire more on Israel's terms. So again, another stage in a staggered preparation for something that may get underway in 2 or 3 weeks.
And if we do, in fact, see this transpiring, then, Dan, what does this mean for an end to the war? Does it, in fact, then mean on Israel's terms, as you were just pointing out there?
Again, on the assumption that Hamas doesn't capitulate, given the sheer expected pressure and pain of this onslaught, of this advance on what is the de facto capital of the Gaza Strip, the de facto seat of what remains of Hamas governance, then we would see within the coming weeks an Israeli attempt to evacuate, to displace some 1 million civilians from Gaza City. The Israelis say they've set up humanitarian camps, displaced person camps further to the south in the Gaza Strip. They did something similar last year in Rafah in southern Gaza, similar numbers of people. Here, the stakes might be different because many Palestinians, and certainly Hamas, will be unlikely or not wanting to leave, seeing this as the end of the war on Israel's terms. If there is a successful evacuation, movement of Palestinians out, then we've been told it would take several months for the Israelis to move in slowly to crush what remains of Hamas in Gaza City, with the additional parallel effort of not hurting or even rescuing the 50 hostages, 20 of them still alive, who are being held, according to the Israelis, in Gaza City and some small townships in the central Gaza Strip.
Still a various situation there. Bloomberg's Dan Williams in Jerusalem with the latest. Dan, thanks as always for your reporting. Now, European leaders are discussing a security guarantee for Ukraine that would commit Kyiv's allies to decide within 24 hours whether to provide military support to the country if it's again attacked by Russia. Italy's Prime Minister, Giorgia Meloni, is pushing a proposal that amounts to a NATO-like collective defense clause, but doesn't come with actual membership in the alliance. The proposal includes providing Kyiv with rapid defense support, economic assistance, as well as imposing sanctions on Russia. And coming up, we turn to Africa. Kenya looks east for debt relief. The country is in talks with China and Japan to ease its debt burden. We'll get you the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Kenya is reshaping how it manages its debt. The government is negotiating with China to convert dollar loans into yuan and extend repayment, while also sealing a new yen loan with Japan after dropping plans for a samurai bond. For more on this, let's bring in Bloomberg's Andira Oganga, who's following the story from Kigali. So, Andira, what is the significance of this reprofiling of Chinese debt, especially if you take a look at the context of where Kenya is economically?
Good morning, Jen. So the elephant in the room here is that China is Kenya's biggest bilateral lender. If you look at the $40 billion in external debt that Kenya owes, $5 billion of that is owed to China. This is money that was borrowed nearly a decade ago to go into financing the standard gauge railway. It goes all the way from the port of Mombasa to Nairobi and Naivasha. And a decade later, the government needs to pay back this money. And they're beginning to feel the weight because the government says that Chinese loans are the biggest driver of debt servicing costs, and they're beginning to feel that pinch. So anything that helps in tackling Chinese debt is very much welcomed. And if we look at this reprofiling, it does a couple of things. Changing that currency from the US dollar rather to the Chinese yuan will first of all reduce interest rate by half, according to the Minister of Finance, and will save the government up to $1 billion on top of increasing maturity period. And this is very much welcome because, one, Kenya is in dire need of fiscal headroom, and this money will go into servicing other competing needs in the country. They'll have money for social spending like healthcare and education, and this is very much needed. And if we look at the few years that President Ruto has been in power, reprofiling debt and looking at debt has been a big priority of his. In 2024, they were able to buy back the Eurobond. They've bought back the 2027 Eurobond, and the Minister of Finance told Bloomberg that they're looking to retire the 2028 Eurobond early. Domestically, they've also bought back some of their loans, and they'll be issuing other loans with longer maturities and lower interest rate, and now exactly what they're doing in China. So I think in entirety, this tells us that debt burden is a bigger problem than they're letting on, and they're doing everything that they can to address it.
Yeah, and Andira, when we think about the decision, though, by Kenya and by Ruto and the finance ministry to choose a yen loan over a samurai bond, did we get any details about why exactly that decision was made?
Jen, so the government tells Bloomberg that they are not going for either or. They will be pursuing both. But what we know so far with surety is what has been confirmed is the yen bond, despite the fact that the government is saying that they still have their eye on the samurai bond. And they're looking at alternative markets outside of the traditional markets that they always go to, because Japan is one of those places where they have some of the cheapest loans in the world. And so because of the fact that the IMF has its eyes on Kenya, high debt burden, high debt servicing costs, risk of debt distress, the government is looking at alternative places where they can access affordable financing without eroding the little fiscal headroom that they have. I mean, Kenya is one of the big economies in the Eastern African part of the continent, and they still have needs, infrastructure, road, railway, airport, and so they will still need money to be able to finance some of these projects.
Fascinating reporting there. Bloomberg's Indira Oganga with the latest about Kenya in Kigali. Thanks so much, Indira, as always. Now, let's take a look at some of the other stories we are following from across the continent. Starting in South Africa, inflation in South Africa quickened to a 10-month high in July, climbing to 3.5% year on year, compared with 3% in the prior month. The increase was driven by food prices and higher utility tariffs. Surge in consumer prices will likely dampen the chance of another interest rate cut when the central bank meets next month. And the U.S. Embassy in Zimbabwe has temporarily suspended most routine visa services in Harare, citing concerns with the Zimbabwean government. The pause affects both immigrant and non-immigrant visas, though diplomatic and official permits continue. The embassy stressed this is not a travel ban and that all valid visas remain in effect. The suspension comes as the U.S. ramps up measures to curb visa misuse following new refundable deposit requirements for travelers from Malawi and Zambia. Now let's take a quick look at futures right now. Flat across the board, though, at least in the U.S., we are seeing a bit of a rebound, at least when it comes to NASDAQ 100 futures, after the NASDAQ was dragged down, again on Wednesday by tech. Now, coming up, gold is in focus ahead of a key speech by Fed Chair Jerome Powell. My next guest sees further upside in the price of precious metal. We'll speak to Amy Gower next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Markets remain in wait-and-see mode as central bankers gather in Jackson Hole, with investors awaiting remarks from Fed Chair Jerome Powell. Fed Governor Lisa Cook says she won't be bullied into stepping down as President Trump demands her resignation over allegations of mortgage fraud. And Israel is doubling its army reservists in its war against Hamas in Gaza, a sign that preparations are underway for a stepped-up offensive despite ongoing talks about a ceasefire. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and we are seeing U.S. equity futures at least rebounding ever so slightly after another down day on Wednesday, largely being dragged down by tech. The next catalyst, potentially, as we were hearing from our guest earlier, Deepak Mehra, could be NVIDIA earnings, although right now we are looking at NASDAQ 100 futures largely flat. Interesting commentary, though, coming from a Bloomberg television guest, Howard Marks, on Wednesday, saying that potentially we're seeing U.S. stocks in the early days of a bubble, although the critical point for a correction has yet to come. Oaktree Capital there, Howard Marks cautioning that remark remark about some stock valuations right now. If we take a look at the Bloomberg dollar, also largely flat, though many investors are focusing in on the dollar, especially as we approach that speech by Fed Chair Jerome Powell at Jackson Hole. We did see the price action, though, of the greenback on Wednesday largely being dominated by those comments that we did get from Trump pressuring Fed Governor Lisa Cook, although we did see after some early losses in the day that paring back those gains after we did get Fed minutes on Wednesday. Brent crude also showing some strength to start the day on Thursday, up just about 0.4%, holding on to the gains following a report that we got on Wednesday about a decline in U.S. inventories, trading right now at about $67.12 a barrel. And gold down about 0.2% there, though, as our Markets Live team notes, stuck in a relatively narrow trading range, especially as we see a bit of dual narratives as far as the metal goes. There is safe haven demand, although it is being subdued a bit by the potential for a ceasefire between Russia and Ukraine, and also as we approach Jackson Hole and that speech by Jerome Powell. And really quickly, let's just bring you our terminal chart for the day, looking at the expectations for a cut at the Federal Reserve's September meeting, especially in the run-up to Powell's speech. Many traders are wondering what, if anything, the previous economic data potentially will have on the comments that we do get from the Fed chair, although interest rate swaps now pricing in about an 80% chance of a cut in September, although strategists still warning that a number of economic releases that we'll get in the next few weeks could potentially have more of an impact than traders are betting right now. Let's check in, though, on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio. Min Min, what are you watching?
Yeah, it's all about tech here in Asia after the several days of sell-off we've seen in the U.S. mega caps, right, over concerns around valuations. But here, interestingly, we are seeing quite a bit of dip buying coming through the likes of Samsung, Advantez gaining here, the TSMC as well, up about 1.3% after the biggest single-day losses yesterday in about 4 months. That's helping to lift the TAIEX index, but the broader MXAP, the Asia-Pacific benchmark, largely sideways today, as you said. Everybody holding their breath for the Jackson Hole meeting tomorrow. But flip the board, we take a look at the China tech space as well. Quite a different picture here. A lot of idiosyncratic stories that are going on. Baidu, of course, on offer today after the earnings report yesterday. Investors really punishing the company after revenue dropped by 4% on year, the biggest decline in about 3 years. A lot of concern around its core search engine business, with the ad sales there down about 15%. But Tencent is up about 0.7%. That's because it just launched its hit game, Valorant, a mobile version of it, and it saw a very strong debut, about $1 million in gross player spending in the app for iPhone's users. And this is only launched in China so far. There isn't a launch date for global markets just yet, but clearly a strong indicator for the company's strategy for what it calls its evergreen franchises. And we're seeing its competitor NetEase also gaining a bit here in the gaming space.
Thanks so much, Min Min Lo in Hong Kong for us there. Min Min, thanks so much for that update. Now, let's turn back to commodities. Gold, as we mentioned, is in focus as traders weigh the outlook for U.S. monetary policy ahead of a key speech by Fed Chair Jerome Powell. The price has climbed more than a quarter this year as trade war fears and geopolitical tensions boost its appeal as a safe asset, while central bank buying and inflows to exchange-traded funds also provide support. Joining us now is Amy Gower, Metals and Mining Commodities Strategist at Morgan Stanley. Amy, thanks so much for being with us. So some interesting commentary that we're getting from our Markets Live team is that there's quite a few confluences of narratives that are in the backdrop of gold's price action right now. How are you assessing what we've seen over the past few days and weeks with the metal?
Yeah, look, I think it's not unusual after we've had a big move up in a commodity to see prices in a bit of a range. I think in terms of the key drivers at the moment, it's really a lot of the move year to date really has been defined by the dollar. So very, very strong inverse correlation there. And so I think the fact that the dollar index has been a bit more sideways probably explains why gold has been a bit more sideways. And then on the demand side as well, while we are seeing strong investment demand, so from bar demand, from ETFs, from central banks, that jewelry demand is starting to get slower with these elevated prices.
Do you see that potentially changing, though, with geopolitical developments? What is the trajectory, in your opinion, for where it goes next?
Yeah, I think for the ETF demand, the most important thing is going to be what happens with the path of interest rates. We do see a strong relationship between, as rates started to hike back in 2022, we started to see ETFs selling gold. And then as we started to get those first cuts last year, that was the catalyst for ETFs to start coming back in. So I think that ETF portion, which has been one of the newer drivers this year, that's going to depend on the path of interest rates. For perhaps some of that investor demand in bar and coin, and then also central banks, there are questions around those geopolitical events. So a lot of the central bank buying really emerged only after the beginning of the Russia-Ukraine conflicts back in 2022. So if there was a resolution, you could ask the question whether that would slow down a little bit. I would say this does look like a structural move. And what we tend to see with central banks is when they change their behavior, it tends to be quite enduring. But perhaps we could see a bit of a slower pace of buying. And then for that bar and coin, again, perhaps a little bit coming out if we start to see things looking a bit more stable. But equally, that jewelry demand could come back. And what we tend to find is jewelry purchases pause when prices move very quickly. But as consumers adjust to the new higher level, often those purchases do come back. So plenty of offsetting factors there.
Amy, let's move to another commodity, copper. How much of what we are seeing with copper is being dominated by tariffs and by the narrative coming out of the U.S. administration?
Yeah, so the US copper benchmark, the COMEX copper price, has been extremely dominated by changes in tariffs. So we had that price really outpacing other global benchmarks ahead of the expected implementation of 50% tariffs on all US copper imports. And then, of course, when those were unwound, most of that pricing out was done specifically in that benchmark. So a very big move lower. And now the only part that will be tariffed is the semi-fabricated products, so things like copper wire, copper rod. So quite a big turnaround versus what the market was expecting. This is also has implications for the LME copper price. So the US had been overbuying copper for much of the last 3-4 months since we started to hear that there might be copper tariffs. And so now the US is very, very well stocked with copper. Arguably unnecessarily now that there won't be tariffs in place. So what we would expect from here is those US copper imports to slow down. And that's been one of the big supports to demand year to date. We could say even the extra US buying has added around 2% to global copper demand. So that is a meaningful contribution that should start to ease off from here. And so hence why we're a bit cautious here on the LME copper price.
Amy, let's just finish off on China, because you do have some expectations for the Politburo meeting and potentially the impact of what we hear there on iron ore and lithium. What is it that you're paying attention to and how that could potentially affect those commodities?
Yeah, so iron ore is always very dominated by China. China takes around 75% of global seaborne iron ore, and therefore its policy and growth outlook has a very big impact. And we've already started to see that with announcements that we've had in recent weeks. So anti-involution and steel supply discipline, and then also starting to see some steps of positive policy direction, whether that was the hydropower dam, a railway project announcement, and then also so those kind of traditional infrastructure. So I think we'd want to see probably more of that, so more debt, sort of more support for those big infrastructure projects, and then also broader support for the global economy.
Amy,
and then
thank
for
you
lithium,
so much for your... Sorry, we unfortunately ran out of time, Amy, but really appreciate your insights and a lot of the research that you have. Amy Gower, Metals and Mining Commodities Strategist at Morgan Stanley. Thank you so much, Amy. Now, we're turning now to the Africa region and talking about Aliko Dangote, Africa's richest person. He's built a $20 billion oil refinery in Nigeria, bigger than any in Europe. But critics are questioning whether his dominance will truly benefit the nation or mainly enrich himself as he seeks to ban foreign competition. Joining us now for more on today's Bloomberg Big Take is Paul Burkhart, one of the authors of that story. Paul, talk to us about who Dangote is and really what we need to know about how he became so wealthy.
Sure. Aliko Dangote is an industrialist, really. We compared him to John D. Rockefeller. He comes from a tradition, he comes from a family that traded, his great-grandfather traded peanuts and other goods to Britain. And then he made his own way, just trading cocoa, cotton. He got into cement and then these other really materials that are essential in Africa, industrializing and rising. So that drew his interest in oil refining, and he put in a bid on a couple of state refineries. Ended up falling through because of controversy and public outcry, but it really planted the seed for his interest in that. And he would go on to design and build this $20 billion mega refinery. It's 650,000 barrels a day. So that's where we are right now.
And Paul, depending on who you speak to, everyone has a comment on Dangote. Do you think he is controversial? Is that a fair classification of him?
It's a difficult. It really does depend on when you look at some of the concessions and tax breaks, that sort of thing that he gets from government to build what he builds and to do what he does. Some of that may seem to some people may seem generous. On the other side, this is infrastructure that otherwise may not be built at all. And Nigeria is really on a quest to refine its own oil because it's been sending crude abroad to come back as fuel, and that's been quite costly. So Dangote's refinery is the solution, and that really, he's managed to do it, but there have been things along the way that have been questioned. And of course, when he does anything, he does it on a very large scale, and he's bound to step on toes. His relationship with the government is also quite complicated and kind of mercurial, where sometimes he seems to be pitted against them and against the import of fuel, and on the other hand, President Bola Tinubu recently called him a visionary, and in some ways, he did realize this vision of Nigeria refining its own crude. So that has to be said.
Yeah, and it took him quite a while, over a decade, to do that. Bloomberg's Paul Burkhart in Cape Town. Paul, thanks so much, and definitely read The Big Take if you have Bloomberg. But for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website. You can now also get the latest news from the continent on our weekly podcast, available on Apple, Spotify, and wherever you get your podcasts. Paul actually joining us this week. And for a deeper dive, catch our TV show Next Africa, airing on TV on the last Friday of every month. You can still watch our previous episodes, though, in full on your terminal, on our website, and of course on YouTube. Plenty more still ahead. This is Bloomberg. Microsoft is limiting Chinese companies' access to early warnings about flaws in its technology. This follows an investigation into whether a leak led to a series of hacks exploiting vulnerabilities in its SharePoint software. Our Asia Tech correspondent, Annabelle Drewlers, is in Hong Kong, and she's joining us now. Annabelle, walk us through some of these changes that we're hearing about from Microsoft.
Yeah, so they actually came out last month and quite a few details in them as well. But just sort of to give that headline takeaway, Microsoft operates what's called the Microsoft Active Protections Program, or MAPP. And the point of that is to give security software companies early details on product flaws so that they can then provide updated protections for their customers faster. Now, this is a program that operates worldwide, but what's going to happen now is that access is going to be limited in countries where MAPP partners need to report vulnerabilities to their governments. And one of the places where you do need to do that is in China. As you said, Microsoft has faced a series of hacks. The most recently was on its SharePoint software. And we have reported previously that there were concerns that hackers could have been aided by MAP partners leaking the flaws. So now MAPP participants in places like China aren't going to be receiving any advance warnings. They're going to instead get the general details on what's gone wrong, the flaws, and then they'll also get the security fixes as they're released.
It's fascinating decision by the company. Annabelle, let's just turn to another event that we were watching very closely on Wednesday, and that was the Made in Google event. They unveiled a number of new gadgets, a lot of them with the focus on AI. What were you watching for?
Yeah, that was sort of the key takeaway, I think, is that further integration that we see of their Gemini AI assistant. But lots of different products came out. They had a range of different smartphones, for instance, the Pixel 10 all the way to the Pixel 10 Pro Folds. That's a price range of $800 to $1,800 US. They had the Pixel Watch 4. That's $350 to $400 for the larger model. Earbuds as well. Those came out retailing for $130 US. Across the board, though, as I said, it's really that bigger focus on AI, integrating the Gemini AI assistant. And that's a platform that the company is becoming increasingly confident in as well, having really determined that they wanted to catch up to OpenAI. What is interesting as well is the positioning of these products, because Google is really making a point here that their Gemini AI tool is more advanced. It's not just a simple chatbot or voice assistant. It does have some agentic AI capabilities, and the company as well would say that their products are a lot more advanced, for instance, what we can get with Apple, with their Apple Assistant or AI Assistant having been delayed.
Pointed shot there. A bit of star power, too, at the event. Our Asia Tech correspondent, Annabelle Druller, is joining us there for the latest. Annabelle, thanks so much. Now, coming up, we head to the Middle East. Abu Dhabi's main renewables company has diverted billions of dollars to AI projects instead of green hydrogen. We'll give you the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Abu Dhabi's main renewables company has diverted billions of dollars to AI projects instead of green hydrogen. Masdar says the falling global demand for clean hydrogen products and the increase in power needed for data centers has prompted the company to adjust course. Joining us now is Bloomberg's Middle East energy reporter, Verity Ratcliffe. Verity, how are you reading into this? Is there not as much interest now in green hydrogen?
Well, the question about green hydrogen is all about cost, and there was a lot of hype around green hydrogen maybe 3 or 4 years ago, where everybody thought this would be the big transition fuel to allow all these countries to reach net zero. In fact, it's developed more slowly than that, and this isn't just a UAE thing, this isn't just a Masdar thing, this is a global thing. The demand hasn't been there necessarily because it's the most expensive way of producing hydrogen. So somebody has to foot the bill between the cost of production and the cost at which buyers are willing to buy it at. And there are some programs, in Europe, in Asia, there are different auctions, but generally it's a much higher cost product, and therefore it's been developing at a slower pace than people had perhaps expected.
And there's a lot of talk of it, too, even here on the continent. When we talk about Masdar, they had big plans for green hydrogen. What is the shift they're making now?
Well, as you said, they've also got this simultaneous rise in power demand to power these huge data centers. The UAE is really doubling down on AI and data centers. There are a few very big projects that are coming up. So there's an opportunity there to switch the power that would otherwise have been used to produce green hydrogen into powering these huge projects, along with everything else. Demand in the UAE is driven up also by the population, but these big projects will have a noticeable impact on the overall demand. And the UAE has its own targets for renewable energy. So if it wants to keep up with those targets, it needs to keep developing more renewable energy as well as traditional. Innovation is key, though, long term. The CEO of Masdar said that they're in the business of green electrons, which can be for any use. It doesn't necessarily have to be for green hydrogen. It doesn't have to be for this or for that. They need to produce green electrons. And once the cost of producing green hydrogen has come down, they'll be able to produce it for any buyers that are out there.
Great reporting there. Verity Ratcliffe, Bloomberg's Middle East energy reporter, joining us to talk about Masdar and some of the shifts we're seeing with green hydrogen. Let's just take a look at where your markets are positioned ahead of the trading day. Of course, all eyes are on that event coming on Friday from Fed Chair Jerome Powell, his speech at Jackson Hole. We are seeing U.S. equity futures largely flat right now, but that coming after what we saw was another down day, especially for the tech-heavy NASDAQ. We're seeing globally a bit of a retreat, a bit of caution in the markets just leading into that Jackson Hole event. If we take a look at oil and Brent crude right now, we are seeing some activity, though, holding on to some of the gains that we saw on Wednesday, coming after we did get a report about a decline in U.S. inventories. Brent crude up right now just over 0.4%. But that is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.